Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen, the midweek. We made it to the midweek. And look, what can I say? For now, we have a little bit of a, I wouldn't say turmoil, but like somewhere where there's like this feeling that something is brewing up, really brewing up. So I don't know, I cannot explain this yet. I mean, I can only explain it from the perspective of what's happening right now. So maybe that will factor in. Look, long story short, stick around. By the way, this is a video preview for the webinar, which is going to happen in a few moments. So yeah, stick around. Hopefully you'll enjoy the session. We'll dig into all that and we'll go from there. I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday. Today's Wednesday, the 27th of August, 2025. Still, yes, we made it to the midweek. Look, we are live. We are live, we're running this show live, and hopefully, ladies and gentlemen, you enjoy the show, and I try to deliver the information to you as clearly as possible and in the most kind of relaxed form. Look, before we jump into the markets, because there are a few things to talk about, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I will just put my usual good morning in the chat room, everyone. Yes, good morning, everyone. I hope, like I said, I hope you're all having a wonderful start of Wednesday. Also, just before we jump into the charts, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, also just wanted to make sure that you are aware that I will be holding the little webinar here, the closed webinar, which you can register for free, and that's going to be held tomorrow. So there's still time. You can register, you can check it out, basically here, you know, we will discuss. We will discuss the MACD. That's what I want. There we go. Stalled there a little bit. We'll discuss the MACD, basically how effective it is, in general, we're going to apply it on real life market action. So we'll check out this, and it's going to be a series of a few webinars where I'm going to be picking up on the most popular indicators, and as we know, sometimes people like to rely on those indicators way too much. So again, we'll see what we can do with that. So please join in. I think it's going to be quite an interesting session. Look, ladies and gentlemen, let's have a look what's happening with the markets. Now, first of all, as always, Nikkei 225. So Nikkei 225. Now, apologies for the amount of lines here, but these are from last week, and basically my apologies for the amount of arrows, because these are from last week, because what I said to you that, look, I like this area. I like this 42,000 kind of 500 zone on the cash on Nikkei cash index, yep, I do like this this hurdle here, because it somehow is continuing to provide good strong support, although we keep on getting these little breakouts here, but certainly for now, what I'm watching here is the area here, the hurdle, this 42,500, and if we continue to trade above it, then yes, there is still a chance for a nice rebound and a push back up. But something tells me that the market is getting worried more and more. We understand that the whole kind of there's a lot to watch. There's a lot to watch at the moment. We have the Fed, we have the NVDA, we have the French little turmoil, I would say political turmoil, for now, like I said, and Nikkei, of course, as well, is something that we will be carefully monitoring. Because look, next month, at the end of next month, we get the BOJ interest rate decision. Of course, it's still a long path, a long way, but I think time flies very quickly. So I think that just be a little bit more on the careful side and continue observing the situation with the global markets, because if those start reversing back down, then we could see a nice reversal to the downside here, and basically we could see a follow through on Nikkei as well. For now, I'm very carefully watching this hurdle. I want to see what's going to happen. If we continue to trade above it, there is a chance for a rebound back up. However, if we somehow drop and stay, if we see the body of the daily candle staying below this 42,500 area, then yes, my next target is this upside line taken from the low of the lowest point of April. That's when we had that big Liberation Day drop, when the leader of the U.S. kind of was standing with the cardboard, and with all these numbers in there. But anyway, that's in the past. It was a good market shakeup. Let's see what's going to be the next one. For now, I think it could be the Fed or even maybe the tech story. China 50 here, beautiful rally. It was up until Monday, end of Monday, and then there we go, boom, we reversed back down. But to be honest, it's all logical here. We're seeing this retracement, and the thing is, we're approaching this 14,588 zone. I talked about it, and as long as we stay above this area, then there is still a good chance for this one to push back up. So long story short, if we do continue to trade above this hurdle, above this 14,588, then yes, I'm still leaning towards the upside. If we clear it and we stay below it, I'm leaning towards the downside, towards a retest of the 50-day EMA. Shown here is the green line. US indices, let's have a look at those. Dow Jones Industrial Average, beautiful rally on Friday. We saw this. I talked about it already on Monday, but on Monday we started correcting back down. Yesterday we drifted lower at one point, tested this breakout point that I talked about previously around the 45,100 zone. And we rebounded, pushed back up. Am I getting very comfortable with the upside? No, not yet, because whenever we go into these all-time highs, I do kind of wait for a clearance of the current all-time high before examining further upside, because at this point it's a little bit too tricky, because again, we had a good run. Maybe you could take the back seat and kind of just chill and drop back down, but even for that we need to see a clearance of this upside line taken from the lowest point of April. We are kind of further away, but again, there is a good chance we could see a nice pop higher. We do have important data coming out, and in general, look, I'll mention all the fundamental side and the macro side in a bit, but for now, purely from the technical perspective, what I'm watching here is, like I said, on the upside is the 45,760 area-ish. That's roughly where the current all-time high is on the cash index. If we can clear that, a forthcoming higher high will be confirmed. For the downside, it needs to see a breakout below this upside line, and this way, more sellers could join in. But at the moment, let's play a little bit the waiting game. Very quickly on the S&P 500, we're very close to the breaking point of the all-time high. The all-time high is around the 6,486 here on my chart. Yesterday we had a beautiful move. Initially it was a retracement, but then very quickly climbed back up, stayed above this 6,435 zone, and in a way That's somewhat of a positive move here. That's a positive move, and there could be further upside. But again, a confirmation break is needed. So we are not really doing anything yet. At the moment, we're just observing the price action. Very quickly on NASDAQ. NASDAQ is the index that we will be watching today very carefully. Why? Excuse me. Why? Because NVIDIA is reporting at the end of the, let me just refresh this. Let me just refresh this very quickly. So earnings, market cap, there we go. Wednesday, there we go. Wednesday, NVIDIA, there we go. That's what we're waiting for. We have CrowdStrike as well, Snowflake, so keep your eyes on that. And certainly, yes, HP is one of those that is going to be reporting. So if you are trading something around among those stocks, those tech stocks, then yep, keep your eyes on that. And like I said, NASDAQ will be the mover tonight after the market closes. So we'll see the futures shifting higher or lower, again, depending on where NVIDIA is going to come out. And certainly, yes, for now, looking at this technical picture, we remain above this upside line. That's fine. So we continue to trade above this. But if we continue to somehow push above this 23,700 zone, or in general, let's say like this, if we do push above this 23,700 territory, if we push back above it, then yes, I'm going to lean a little bit more towards the downside, the upside. For now, the downside scenario is only on a break of this steeper, actually this upside line. That's not even a steep one. This upside line taken from the low the 23rd of May. If we clear it, I'll go towards the downside. I'll aim for that, for this highlighted zone, because this is a good area of support for me. It's below the 50-day EMA, but nevertheless could be a good area of support. That said, if we do fall below the 50-day EMA, then of course it opens the door towards that 100-day EMA. For now, that's the game plan. That's what I'm kind of looking at. And to be honest, it would be a little bit difficult to do anything with this right now, just until we get for the whole trading day today. I think it could be a little bit up and down, choppy, and waiting for NVIDIA's earnings. So I think that's what the market is hoping for. So speaking of NVIDIA, I'll get to US data in a bit, but speaking about NVIDIA, look at this. I mean, beautiful reversal back up here on Monday. We saw on Monday. On Friday, we saw a beautiful reversal here. Of course, Jackson Hole Symposium and Powell's speech did help the stock market to travel back up. And yes, of course, 184.5 zone. This is what we're watching. This is the current all-time high, or near the current all-time high. And if we can clear that, amazing. I'll go to the upside. We could clear this. And then, yes, we could go further north, aiming for the 190, maybe even 200. Who knows? But look, with NVIDIA, I did a little piece on NVIDIA recently. You can check out our page on YouTube. Let me just show you what I'm talking about. Oh boy, where's that? There we go. So this is what I'm talking about. So if you jump into videos, you'll see this this little report that I did. And check it out. I'm not going to spend too much time talking about right now NVIDIA, because I need to go into other instruments. But like, if you are interested in this topic, like I said, here's the video on our Markets.com page here, and you can try to, like I said, dig into that one. Let me know if you agree or not. Hey, long story short, in terms of NVIDIA, look, there are some headwinds. The market is expecting a lot right now from this company. Can it deliver? Now, that's a good question. If it can deliver, if it can beat the forecast by a lot, great. It could go further north, even towards that, like I said, towards that 200 zone. But if it comes out, let's say, closer to what's expected, the question is this enough for market participants? Because maybe they're hoping for more. Again, the appetite rises while you eat. So So I think that there's a lot of expectation from this company, and if it just a little bit misses by something, a little bit there, it can change the game very quickly. Anyway, like I said, check it out. But certainly for the upside scenario, I need to see a break of this 184.50. For the downside, 170 zone is required to be violated before considering lower areas. In terms of economic data, ladies and gentlemen. So today, Wednesday, let me just jump into the calendar. Today is Wednesday, and we got the Australian monthly CPI indicator that came out. Well, look at this, boom, 2.8. Okay, now this is a bit of a bummer for the RBA, because those guys were on a path of cutting rates, and now this is not really sparkling well with the RBA, in my opinion. Again, we'll see what's going to happen next, but certainly something to watch out for. JFK consumer German numbers, why are they not showing up here? There we go. Worse than forecast, than the previous. Right, the GFK consumer confidence. Germans are not feeling very confident right now. Later on, going into the market, U.S. mortgage rate, this is something as well that we're keeping a close eye on. At the moment, it's kind of on a slide, which is kind of fine, I would say, for the consumer. But again, maybe this is a little bit I wouldn't say manipulated, but encouraged by the White House. Because at the moment, yes, housing is important. Housing is something that might be a little bit tricky right now. Let's say house prices yesterday came out. Let's have a look what happened there. 2.6 dropping. So basically house price inflation is on a bit of a rise, but house price index year on year is dropping. That indicates a slowdown. Indicates a slowdown. Yesterday, CB consumer confidence improved. It came out better than the forecast, but lower than the previous. That's also a bummer. Let's going into today. We have the mortgage rate. That's one thing. EIA crude oil stock change. That's if you're trading oil. Keep your eyes on that one. But going into Thursday, I think that in the US, yes, we will have the GDP estimates, pending home sales, something like that. So pending home sales in GDP, and I think that's kind of it. Continuous and initial and continuous jobless claims. We'll see how the labor market looks and how the housing market looks as well. Because Friday we also have the housing stats, apart from the very, very important core and headline PCE numbers from the US. So keep those in mind. And certainly, yes. Michigan 5-year inflation expectation, Chicago PMI. Look, Friday is going to be an interesting day. I think it's going to be a CPI day everywhere, and it's going to be a big market mover, in my opinion. Last day of the summer, last day of the month, last day of the week, everything last day. I mean, it will be just I think it's a good symbolic day, and everything is aligning perfectly. And I think, like I said, we expect some movement on Friday. So if we're not going to see much action today, or should say tomorrow, then yes, I think that we are going to be brewing for a Friday move. And I'm really, like I said, I'm really being cautious with this right now. Anyway, jumping into the dollar index. So of course, the big issue right now in the U.S., the Fed saga between the Fed and the White House, because again, all these talks about how the White House wants to get rid of Lisa Cook, and she's one of the Fed board members. So yes, I mean, I think it's all political, of course. I think everybody understands that as well. I mean, there's nothing to hide here. I think everybody understands that, it's a tool of intimidation, in order to kind of, for the Fed to go and lower those rates coming in September. Look, at the moment, I think that's what we're expecting, a lower rate in September, and September 17th. We're expecting that cut, and I think that's going to happen. And I think that it's more of it's like more of a, okay, here you go, here you go, that, like, can you calm down now, please? So it's one of those, at least it seems like that, because in general, well, you don't really need a cut. You really don't need. Your dollar is at the lowest levels. Your inflation is picking up, so for example, US inflation rate, yep, there we go. So this is, inflation has been ticking up slowly, and I recently I talked about this kind of chart here. This is the headline year-on-year U.S. inflation, and I talked about this, and I said that, look, if we would apply technical analysis on this one, after having a sharp decline and then having a gradual decline, you again, theoretically, normally you get a pop higher. So it's if that's of course you don't apply this logic on this chart, but in general, so if we would see that breakthrough to the upside, then of course the psychological 4 level would be the one that I would be watching very carefully. I think that in general there are fears of a possible stagflation actually happening, where you have your economic slowdown, but you have an increase in unemployment and an increase in inflation. So basically, it's a rare occurrence, and people are talking more and more about it, and I do understand why they're talking about it, because again, it has a place to be. Certainly, we'll see how it plays out all. For now, looking at this picture here, the US dollar still holding in somewhere above this upside line, although it got violated, so I think I would need to be getting rid of it. I would need to get rid of it. But I'm just keeping it for now. But in general, look, my upside scenario is on a break of this 100-day EMA, shown as the blue line, wherever it's going to be. If we can clear it, I'm going to go higher. If we break below this upside line and we fall below the 97.42 zone right there, then yes, I am going to lean a little bit more towards the downside, and then we'll just kind of take it from there. Long story short, yes, for now I am watching this carefully, and I'm not really touching this, to be honest. I'm just watching, but I'm not touching, because again, it is a difficult one here, because again, I think that we're waiting for the PCE figure to come out, and just to remind you what that number could be. Let me just jump into the PC here. So first of all, of course, we're watching the the GDP is from Canada. Wait just a second. Yeah, GDP is from Canada. Apologies for that. I thought it was the US GDP. Anyway, got mixed up here. But we're watching the core and the headline PC very carefully. The year-on-year 2.6 headline is expected to come out, yes, at 2.6, but the core is expected to tick up a little bit. So basically, this one factors in food and energy, this one doesn't. So you can understand that, if oil is dropping lower recently, I mean, has been dropping lower recently, then yes, this number here, sorry, this is the month, this is for the previous month, so that oil was dropping in the previous month, and that's why we should be getting this one on a lower side, to be honest. Yeah, but I think that okay, inflation, that means that the goods and services are getting higher, but oil is keeping this number on the lower side here. There we go. That's probably what it is. Okay, that's understandable. That's all okay. So core year-on-year PCE. This one excludes food and energy, and you can see that the service sector is kind of getting more expensive. So there we go. Okay, the interesting bit would be if we hit 3%. If we hit 3% on the core, on the headline, that would be, again, on the headline, I don't think that we will hit that, but on the core, if we hit the 3% here, I am then I'm going to get worried, and I think that the Fed, then I think that there could be a moment that this column here could drop, and maybe there would be a moment that they would say that maybe interest rate cuts are not the most appropriate right now, although I know one guy in the White House who's not going to agree with that. So, but hey, Let's see. Let's see how this is going to play out. So yes, keep your eyes on Friday. Honestly, I think it's going to be an interesting day. Let's jump into Europe very quickly. The German DAX dropping like crazy, ladies and gentlemen. Okay, it's an interesting moment here right now. It's yes, we are sliding back down. Okay. What can I say? This hurdle here, the 24,200. Now look, yesterday we also drifted heavily to the downside, but then at the end of the day, the trading session, we climbed back above this 24,200 and we stayed above it. So what's stopping it from doing the same thing today? Like for example, dropping all the way down here, testing the 50-day EMA again, and then rebounding and pushing back up. Again, this is just an idea. Let's see if this idea will have a follow through. But I think at this point, I will be taking a little bit more of a careful approach. And if we do fall below the 50-day EMA, I'm going to lean towards the downside, and I'm going to aim for that 100-day EMA, and then we'll just take it from there. So that's going to be my game plan right now. Certainly, let's see how this is going to play out, but I don't want to rush into things yet. I want to see if we can retest this 50-day EMA here on my daily chart. If we can, then the next question is, can we get that rebound? FTSE 100 very quickly. FTSE, after creating a new all-time high last week, we are now correcting back down. Very simple on the FTSE. Look, I mean, I said to you that if we do clear the current all-time high, I'm going to go higher. That's kind of it, you know, because whenever we are hitting all-time highs, we need to be careful, because again, this points to the idea that it could go either way. Well, I mean, it always can go either way, but whenever we are at all-time highs, it's always tricky to go for further upside, just because again, you're thinking, is this the top? Is this the from where it's going to reverse back down, or what's the case? So long story short, that's why I always take a conservative approach here on this one, and I'll wait for a clearance of the current all-time high, and then we'll go from there. In terms of the downside, look, from the very, very short-term perspective on the FTSE here, let's see if this is going to carry any significance. Yeah, maybe. This upside line, taken from the low of the 16th of July, could be an interesting one for the downside. If we break it, I will go lower. I'll go for that 50-day EMA. Let's quickly jump into something that we don't look at very often, and basically that's the CAC 40. Let me just confirm the pricing here. Let me just double check something very quickly, because I want to check the major indices, but for some reason my computer is stalling a little bit, and yes, we are stuck. Anyway, yep, we are definitely stuck. My computer is stuck, and okay. Are we back? Yep, are we back? Are we back? Okay, my computer is stalling a little bit, so, right, okay, let's close out here a few things. Yeah, sorry about this, but anyway, so yeah, cash index. There we go. The main index here is the yes, CAC 40 yesterday declined heavily. I mean, we started declining on Monday. That we started getting some issues with political issues in France, and the current Prime Minister François Bayrou, or please, my French viewers here, please forgive me for the pronunciation, but yeah, basically they're going to be holding a confidence vote, of the vote of confidence on the September 8th, on the 8th of September. On the 10th of September, let me just double check. I think there was a piece, another interesting piece, that on the 10th of September, there's going to be something else. They're trying to impose the budget cuts, the changes in the budget, and there's a lot of things. There we go. So the 10th of September, we're expecting a big, massive strike in the country. and which has been threatened, which has threatened to paralyze the economic activity. Okay, look. On one hand, I do understand there are a few things that maybe the citizens don't like. On the other hand, doing these strikes that block or can damage the economy. It's not only you need to express your opinion, but you need to understand that there could be further implications. At the moment, this is what CAC 40 is reacting to. We're seeing this strong decline, and at the moment, I think what's happening here, we're stuck from the technical perspective. We are stuck in a very nice, beautiful little range here, kind of roughly something roughly around these lines. I would actually even say maybe around these lines. There we go. Yes. So yeah, it's roughly between 8,000 territory and on the upside, and 7,500 on the downside. So in this wide 500-point range, we're currently stuck, and we're moving towards the lower side. We're currently trying to fall below we're falling already below all the EMAs on my daily chart. But let's see if we can actually stay below those EMAs. If we can, then yes, I'm targeting the lower side of this kind of potential range here. So yeah, ladies and gentlemen, let's have a look at what's happening in the Forex world very quickly. We're flagging out here on AUDUSD. I talked about this last week. I said that, hey, maybe if we're going to find good support here near the 0.6418, we could rebound, we could form this nice descending triangle pattern. And at the moment, we are still within the pattern, but we're moving towards the upper side of it. My next target is this downside line, and then we'll just kind of take it from there. AUDJPY, yes, and the same story. We climbed above all the EMAs here, but it looks somewhat positive, but we have this downside line, which we would need to overcome first. So I'm aiming for that one. NZD/USD is drifting to the downside here. This one's actually interesting. Then AUD/NZD is pushing. There we go. Why did I did not mention AUD/NZD? Look, we cleared the upper side of the rising channel here. Now the question is now, is this actually a rising channel? Because if you imagine this, if we somehow drift back down and stay below this upper side of the rising channel, then yeah, then we'll consider it would be a beautiful a moment here, maybe for a down move here. But at this point, everything's looking quite positive, to be honest. So I cannot really go against this, and I'm not really getting comfortable with the upside, but certainly I'm examining the upside scenario at this point while we remain above the upper side of the this rising channel. Coming back to NZD pairs, other NZD pairs. So yes, NZD/USD is drifting to the downside, a little bit of strength in the US dollar. NZD/JPY. Okay, this tells me that there could be a possibility for a strengthening of the Japanese yen, because if the stock market suddenly doesn't love the fact what's going to happen with the Fed, between the Fed and the White House, then yeah, I mean, we could see the stock market reversing south very quickly, and we could see the stalled myself here. We could see the Japanese yen picking up interest. In general, safe havens like Japanese yen, Swiss franc, they could pick up interest, and we could see this one drifting nicely to the downside. USDJPY. Now here we have the US dollar, which could also be seen as a safe haven of such, but at the moment, the U.S. dollar is kind of vulnerable to what the Fed's interest rate decision, and at the moment we're expecting a cut. So I don't think that it could be on the stronger side. The market kind of understands that, and that's why the Japanese yen is the one that could still benefit the most if the stock market reverses south. So keep your eyes on this. For now, I'm watching this carefully. I'm watching these two EMAs here, the 100 and the 50, which are currently coinciding here a little bit. For the upside, a push above the 148.45 zone is the one that I'm watching very carefully. USD CAD, what I'm looking at here is that we are still trading below the 200-day EMA. So if we do somehow push back above the 200-day EMA, then yes, great, more buyers here could join in. But if we somehow fall below the 1.38 zone right here, I'm leaning a little bit more towards the downside. USDCHF, just a copy of DXY in a way, and look at this, how well this 0.8025 zone is providing support and how well it's holding. So as long as we stay above it, then there's a good chance for this one to move higher. But for move higher, probably I would need to see a clearance of this downside line, and then we'll just kind of take it from there. EURUSD is on a verge of breaking lower. Let's see if the 50-day EMA together with the 1.1596 territory right here, or in general this 1.16 zone, if those two continue to provide support, if they are continuing to provide support, then yes, we could see this one rebounding back up. But if they don't, well, ladies and gentlemen, prepare yourselves for a possible move downwards here towards the 1.1550 or even below that. I think that yes, at this point we're being very careful here, not rushing into conclusions, but certainly we are at a very interesting spot. EUROJPY, it's stuck still. Look, I'm going to say the same thing. I'm going to wait for this one to kind of make a move either through this 173 territory, or I would like to see this one moving and dropping below this 171 area. If we can clear one of those sides, then yes, I'm going to consider the next short-term directional move. GBPUSD, GBPUSD is at an interesting spot here as well. We're stuck. I need a clearance on the upside. I need a clearance of the 1.3585. On the downside, a drop below the 100-day EMA would be required. GBPJPY, again, similarly as EUROJPY, we're currently waiting for this one to move. However, I think that this one's a little bit more interesting than the other one, the EUROJPY, because we're forming a falling channel, and while we remain inside the channel, this could still drift to the downside, but we're very close to the upper side of this falling channel, and that means that, well, we need to see a clearance of this downside line. If we can get that clearance, I will go to the upside. That's what I'm going to do. For now, we are being very careful here, and certainly, yes, we're not rushing into any conclusion. CAD-JPY, nothing major here. Oh, actually, no. You know what? It's an interesting one. From the technical perspective, that's what I talked about previously. I like these formations. Look, indeed, I do like these formations. Look, a strong decline and then a gradual decline. This is kind of pointing a little bit more for a possible breakout, which we already are seeing. Okay, that's interesting. That's good. So keep your eyes on this one. Let's see if this is going to work out. Let's jump into commodities. Gold, ladies and gentlemen. Look, okay. Gold continues to trade above this 3,374. Yesterday, beautiful rally, pushed higher. We broke this downside line. So it should be somewhere here actually. We broke the downside line. We now retested it from above, and the question is, can we rebound and push back up? Well, let's put it this way. As long as we stay above the 3,374 territory, I'm going to continue targeting the upside. If we fall below it and stay below it, yep, there is a chance for a drift back down. So long story short, for now, we are at a very important key area of support. If it continues to hold, yes, there is a good chance for a move towards that 3,400, or even better, this key area of resistance of mine, which is between the 3,430 and 50 levels. So let's see how this is going to play out. Silver, similar story, a bit of a drift back down. We fell back below the 38.72 territory. So in a way, I'm not going to rush into the downside yet, but certainly we have a little issue here. Let me just double check if there is any logic in this. if there is any logic in this. Okay, yes, a rising channel. Okay, ladies and gentlemen, we're in a rising channel. So that means that we could, even though we could see a bit of a retracement, the overall trend is still, well, the overall channel trend is still to the upside. So we could continue drifting higher. So keep that in mind. It's just that we need to find a good area of support. Maybe this could be the case, the 38.2, 38.26, yep, could be the case. So let's see if we can stay above it. Palladium, very quickly on Palladium. Ooh, breaking the upside line. Wow, this is very interesting. So we're breaking the upside line, we're falling below the 100-day EMA, and that's kind of opening the door towards that 200-day EMA. Let's see if that's going to be the case, if we can travel towards that area. But certainly, yes, the 200-day EMA is the one that I'm watching here. Platinum, platinum is stuck, and it's stuck in this formation. Look, it's a rising wedge. In general, this whole structure looks bearish. We have a strong decline, then a little retracement here. Looks like a flag or pennant, actually. A bearish flag or a bearish pennant, and yeah, and also this flag is more of a like a rising wedge. It's also another bearish indication. So yeah, everything is kind of pointing towards the downside. So however, a clearance of the lower side here is needed. So if we can get that move, amazing. More sellers could join in. Copper, yeah, beautiful hold up near the 4.54 area, and now we're drifting back down. So at the moment, I'm going to lean a little bit more towards the downside, and especially looking at this also looks like a bearish flag. So, but again, a clearance of this hurdle is needed. Very quickly on oil, oil drifting nicely to the downside. The $65 mark worked like a charm. I talked a lot about this. And yep, I'm going to continue. Look, I'm going to continue targeting that $60 mark as long as we stay below the $65 mark. Very quickly on natural gas. Yep, still kind of drifting lower, but getting closer to this downside line. Now, this downside line is a little bit on the tentative side, but if we can get a break of it, maybe more buyers could join in. Coffee. Now, my beloved coffee. Okay, good result here in general. Look at this rally, which we had here. I mean, wow. But we're now getting closer to this, or we're already very close to this downside line. So if you're wondering why would this rally in general happen, well, basically, it's the tariffs to blame. Because look, Brazil exports a lot of coffee, you know, and it's one of the top producers. The U.S. is one of the top buyers, but then, you know, the White House comes out saying we're going to impose 50% on Brazil's products, and there you go. Coffee is one of those. Unless they're going to come out suddenly with an exception saying, oh, you know what, coffee is okay because we like coffee and we need the coffee and we cannot afford to pay that much for coffee. So, hey, excluding. Then we'll see the futures here falling back down. But at this point, yes, it's a demand-supply game here at the moment, and let's see if this can actually climb even further north. Cocoa. Cocoa is, yes, drifting lower, and certainly we are watching this carefully, and at the moment we're falling below this key area of support of mine. If we can stay below it, I'm going to go further south. Wheat, yes, after a good sharp push higher here, we stabilized around the 530 mark, somewhere there, and yep, we're watching further upside in a way, because again, we're seeing a nice rebound from that psychological 500 zone, and I think that there is a chance for a move towards this downside line first, which is taken from the high, or should I say the highest point of February of 2025. Very quickly on sugar, still holding above this upside line, but struggling to move higher. Look, I need to push at least above this 50-day EMA shown as the green line in order to get more comfortable with the upside. Jumping into cotton, and yes, this one is to the downside, fell below all my EMAs in the daily chart here. Well, I talked about this idea of a bullish flag, and yep, this is kind of ignoring this idea. And this is actually a good example, which I always say that although something maybe looks very straightforward and clear, it can always backfire, and you need to wait for breakouts. Wait for breakouts, and then you can do something about it. Let's jump into our final dessert moment here. Cryptos looking good. Look, Bitcoin. I talked about a lot about this one, and last week I said that I am getting more comfortable with the downside if we do remain below the 116 zone. Then there we go. We did remain below the 116 zone. Then I said I'm going to target the 112. Beautiful test, beautiful, amazing, everything is good. But then I said that there is also an element, the level, the 110,550-ish, and we reached that perfectly. We even surpassed that to the downside. We fell below the 100-day EMA. And now we're seeing this kind of oscillation moment around the 100-day EMA. So this is, I think, what could stay around, what could happen. And if we somehow once again drop below the 100-day EMA, below that 110 territory, 110,000 zone, of course, then yes, I would love to see this one actually correcting much lower, just because it can be picked up at a better price. In general, right now, we're watching this carefully. We cleared the 23.6 here on the Fibonacci, which is drawn from the lowest point of April to the current all-time high. And in a way, there is a chance now to travel towards that 38.2, which is roughly around the 105,000 zone, but slightly below that we have the 200 and the psychological 100 level as well. That could be an interesting target. The 100 level is near, it's around the 50% on the Fibonacci retracement. Bitcoin Cash very quickly. Okay, flirting with this lower side of the rising channel, and flirting also with the 50-day EMA. I don't like this. I'm not doing anything with this one because, again, I like it when it's straightforward and clear. At this point, it's just kind of flirting with this 50-day EMA on the lower side of the rising channel. So yeah, I'm not gonna rush into things for now. I'm just watching the levels here, watching this. If we somehow travel back above the 563 territory, I'll consider a move to the upside. Ethereum, beautiful rebound yesterday, pushed back up, but hey, nowhere near still the all-time high. The all-time high is not far from that psychological 5,000 zone. And we had a good move towards it, but failed to reach it, so we drifted back down. In general, I said too that if we somehow push back below the 4,862, I'm leaning a little bit more towards the downside. We got the move, but I was hoping to see a test of this upside line. Well, okay, can't get everything, right? But there is still a good chance we could see it drift lower. So if we continue to trade somewhere below the 4,862, I will continue targeting the downside, but in the near term. So basically considering a larger correction back down. Ripple, it is just loving that 3 level, honestly. It's just hugging around. It's I think we need to take a very conservative approach here on this one. And look, I would say this way: if we do fall below the 100-day EMA, wherever it's going to be, then I'm going to lean towards the downside. For the upside, I need to see a break of this downside line taken from the high of the 21st of July. If we can get that move, wonderful. I will go to the upside. Litecoin, again, roller coaster ride. But what's interesting here, basically, I talked about this hurdle here, the 112 zone-ish. We fell below it. We fell below the 50-day EMA. We traveled lower, and then yes, we tested this 106.60. So good area of support, rebounded, pushed back up. Now this 106.60 is the one that I'm watching. If we can clear it, yes, I will go to the downside. For the upside, a push through this downside line, that could open the door to some higher areas. Very quickly on Dogecoin, what's happening here? Also a beautiful rebound from the 200-day EMA. That's good. That's great. I think that yes, the conservative way here is to wait for a drop below the 200-day EMA. If we can get that clearance, more sellers here could join in. Polkadot. Polkadot is Polkadot it's coiling up, and yep, at this point I'm just waiting for a clearance of one of these lines here, basically through one of the sides of the triangle. And finally, Tron, look, beautiful decline, beautiful retracement back up. So as long as we continue to trade below this upside line and this 0.3538 zone, I will continue targeting the downside. I'm going to aim for my 50-day EMA wherever it's going to be, and then we'll go from there. If we clear it, yes, great, I'll go lower. But if we don't, maybe another rebound here could be possible. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I hope you found it useful. Tomorrow, once again, just a quick reminder, tomorrow I'm holding my closed event here, which you can join. You can find the link in the description below. Like I said, join me. We're going to look at the MACD. It's going to be a series of webinars where I'm going to be picking up on the most popular indicators and applying them in real life action. So yeah, let's test out MACD tomorrow together. Ladies and gentlemen, thank you very much for watching and listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose. Don't overtrade and everything will be fine. I'll see you later. Bye-bye.